Welcome to another episode of Coffee with Alissa. Today we continue the real estate investment series and we'll be discussing a housing update with Kelly Hanna Riley, President of Global Relocation and Business Development at Howard Hanna Real Estate Services and President of Howard Hanna's full-service relocation management company, Relocation Horizons. Kelly's responsibilities include networking with local and national corporations to market and develop Howard Hanna relocation and affinity programs for their executives and employees. As a member of the third generation of the Hanna family to serve a leadership role in the company, Kelly has a deep commitment to the real estate business and to sellers, buyers, and agents alike. As an expert in her field, Kelly will answer some commonly asked questions today. So Kelly, how are you today? Thank you for joining us.
Hi, Alissa. Thanks for having me. I'm happy to be here.
So first question I think that's on everybody's mind is, during the pandemic, we saw the housing market skyrocket. People were paying just ridiculous amounts for houses and they were flying off the market. Can you explain some of the factors that contributed to this?
Yeah, I think we would say sort of a combustion of things. When the pandemic hit, I don't think anyone anticipated the housing market to do what it did. So our agents really were pivotal and from all companies, but we like to say from Howard Hanna, and really trying to say, okay, because people wanted to get into houses, and though we couldn't necessarily show them, people were buying houses without even seeing them over asking price, $50,000, $100,000 over asking. So the market was crazy to us, where we all just went, whoa, what's happening? But really what was happening was we found people down in our downtown areas really wanted land. We found people decided they like working from home for the most part. They maybe want 2 offices for 2 adults living in the home. They wanted pools. They want swimming pools. They wanted basketball courts. They wanted space to be at home and enjoy their homes. And that's really where the pent up change came from. And it wasn't just people flying to the suburbs, though we saw a lot of that. The cities, the housing market in the city, not necessarily the apartment market, but the housing market, people wanted to be in the city. They wanted to be, but land in the city. They wanted more, a walking distance to parks and recreation. So it was an interesting time for sure. And I think that really contributes to a lot of people. They changed the way they wanted to live.
And because of that, they were willing to pay more for what they were
willing to pay more, right? Because then you also had another group of people that were like, well, we love we're not going to move now. We really are appreciating our house that we have. And so we therefore had a decrease in inventory. And that was, that's where the price hike goes up for somebody that wants to move, right?
So with rates rising over the last time period, we've seen some regulation in the pricing in the housing market. Have we gotten back to what we would call normal, or what is the new normal?
I would say that I don't know when you first bought a house, Alyssa, but I would say that the rates right now are actually really good. We were just so spoiled. I mean, never in the history of time has there been rates at 2%, never, ever. And I would say back in the 2005 to 2010, I mean, the markets, if you had a 6% interest rate, you were like high-fiving because that was great. So I think normal is where we're coming to, we're sort of normalizing, and the equilibrium isn't so off one way or the other. And we're going to start to see, hopefully, that, all across everywhere. And we need inventory. We need listings. We need people to not be afraid to list their homes, because now's the time they can't. It's still a seller's market. They still can get a great amount of money for their houses. But we need people to even it out by putting inventory on the market.
So if we shift back to COVID questions, I can't help but think that a lot of people purchased homes that maybe they really couldn't afford because they were spending, such a high amount to get the homes that they wanted. So at the end of stimulus payments and student loan payments potentially restarting at some point this year, we still have a lot of people that are choosing to be out of the traditional workforce, so they're not receiving a regular paycheck. Rates are still rising. What do you anticipate happening to real estate over the next few years?
Yeah, I think the thing is, the people that bought houses in the last couple of years really can't afford them because the rates were so low. So, I mean, they're not struggling in that sense, even though like you said, all of those things, the stimulus, everything, their rates were really low. So they may have paid more for the house, but the rates are so low that their payment every month is much more acceptable. I mean, I think that we're going to wait and see here, but I don't think rates are going to continue to rise significantly. We don't have control over it, of course, but we don't see it so significant as it's been in the last year. It's been rising pretty big jumps. Some interesting things we've found is that, cash buyers are really big right now. So a lot of millennials, who are one of our biggest buyer pool right now, if not the biggest, they have been maybe at home and living with parents and saving money. And so, or people have invested really well, and the stock market did great for the last few years. So now there's cash. And so we're seeing just this incredible influx of cash buyers right now. So I think it's just going to sort of even itself out. I think as more empty nesters sort of start to find product, which is a problem, at least in this area, and everywhere actually in the country, is finding, affordable one level living. But I think if we can continue to build those and continue to make those available, that of course opens up their homes that they're selling, which opens up, the next home down, which opens up first time home buyer, and everybody sort of can just move, trajectory can move up.
Well, all very interesting. I think we're going to have a lot to watch as the next few years unfold and things hopefully steady out. And I really appreciate your time today and that you answered some commonly asked questions here. And I hope you have a great day.
Thanks, Alyssa. Thanks for having me.